Hello students, this is your Mr. GST who actually makes GST a good and simple tax for you. In this video, we are going to quickly cover MTP2 in less than 40 minutes actually, which is for May 2025 exam, 100% coverage of the MTP, and it definitely is going to be very useful for you. I am going to discuss the key concepts or tricky adjustments here, and also MTP1 is also uploaded within less than 45 minutes, and mainly sir, 35 MCQ case studies booklet which has been released by Institute. I have summarized it fully in 1.5 hours. That video is also available. If you have not watched it, please do watch it. So let us get into this particular video. So if you see, yes, the MTP2 series 2 2025 May 2025 exam. The first case scenario 1, 10 marks, 5 MCQs are there. See, first of all, there is a person by name Mr. Samarth, who is a proprietor of a particular business, and he is trading in some office stationery items, all this stuff. He has taken the store on lease from Kolkata Municipal Corporation, so government. So obviously, if this fellow is registered RCM, not registered FCM. Hope you are aware of it. Next, during the previous financial year, the turnover was 14 lakhs. This information is going to be very important. Okay, and he's supplying goods within the state of West Bengal only. All his supplies are within West Bengal only, but he is purchasing somewhere in Delhi and Mumbai also. And he owns a duplex house in Kolkata, and he is staying in the ground floor, and he is letting out first floor into the employee of any IDFC, IDICI bank. Further, the rent is paid by the bank only. That means what? Here you are renting the house to a company for business purpose. Of course, residential purpose, but this is business. Rent is paid by employer means even though it is residential purpose, it is taxable, and because it is a residential property for commercial purpose, always RCM. No matter whether the supplier is registered or not, if the recipient is registered, straight away RCM. So no tax implication for Mr. Samarth. Hope you are clear with that. Next, he has applied for registration, voluntary registration on 2nd April, but he got registration on 9th April 2024. That means whatever the closing stock inputs on 8th April, he can take ITC on that. Okay. Now, so please understand here. Now the interesting point here is, see, they have given the closing stock on the date of applying for registration as well as on the date of grant of registration certificate preceding day. So this is a trap actually for you. For you, ITC will come only for the immediately preceding day of date of grant of registration certificate, because this is a voluntary registration case. So ITC will be available for the closing stock on 8th April, not on the 2nd April. Okay, right. And one more thing, they have given various details of Samarth current financial year. This is related to current financial year. So 1st to 8th, they have given information. Again, from 9th to 31st March, the balance period of the financial year, they give the details. Now, these two, if you see, these are sales. So whatever the sales he has made during his registration is not there. Obviously, GST will not come into picture. Okay, no GST. So nothing to worry, no GST here, both the cases. But the sales what he has made from 9th April to 31st March, of course, there will be GST on this 84 lakhs and 14 lakhs. Now, legal fees paid to advocate, if you see, the legal fees paid to advocate, here nothing is there. Here 10 lakhs is there. This is very important adjustment. Please remember, even I first when I solved this, I thought this is RCM and ITC can be claimed. But there is no such thing. Please understand, this is exempt under GST, because legal services provided to a business entity whose aggregate turnover in the preceding financial year is not exceeding the threshold limit liable for registration. Here for this fellow, aggregate turnover in the preceding financial year is just 14 lakhs. That is why I told you this is going to be very important information, because legal services are exempt. That is one mistake even I did when I was solving this MCQ. So please be careful. Okay. So I'm just being honest with you. So whatever the mistakes I got, of course, that is nothing but a trap. Again, we might have ignored some information. We know the law, but we ignore certain information. Because of that, we get the wrong answer. Okay. So that is what the point. Yes. So legal services exempt here. So please be careful. Next, purchase of stationery items. When he was unregistered, obviously, when he has purchased the stationery items, he cannot take ITC. He can take ITC only on the closing stock on 8th April. Apart from that, nothing he can take ITC. So here ITC will not come. So here also, whatever he has purchased, ITC will not come. And this transportation charges for unregistered people. So GTA services provided to a person who is not registered other than specified recipients. This is exempt under GST. RCM will not come into picture. Understand that. GTA services provided during this fellow is unregistered. This is not a specified recipient. So exempt under GST, GTA services, RCM will not come here. RCM will not come here. Are you understanding the point? Next, interest income, of course, exempt, and for any purpose you should ignore it. This is like composition scheme question also is there. So exempt are simple. So no tax implication, nothing. Next, so if you see here during this period again, the purchase of stationery items happily you can take ITC on that. Again, purchase of furniture you can take ITC on that. Next, purchase of stationery items from registered dealer. And one second, please understand here. Purchase of furniture for use in own office from unregistered dealer. This fellow will not charge GST only. So no ITC, nothing. Next, purchase of stationery item from registered fellow. Yes, you can take happily ITC. Next, lease rent of store paid to Kolkata Municipal Corporation. Then automatically this is what RCM, and you can also pay ITC on that. Next, GTA services to registered person, RCM, and you have to pay. You can take ITC on that. Next, interest income, again this is exempt. Again, fixed deposit interest exempt. Rent received from IDICA bank. See, this is your outward supply. This is your sale, but sale covered under RCM. IDICA bank only will pay GST on that. For you, Samarth, no tax implication, nothing. Okay, so that is what the point. So if you see here in the questions, what are the key points actually now? Sir, what is the value of outward supply tax on which Samarth has to pay? What is the value of outward supply tax on which Samarth has to pay? Outward supply, that means RCM liability should not be taken here. No RCM liability, and they are also asking you value, not even the liability, they are asking you value. So here nothing but, sir, these are the only two supplies which he made which are taxable, and this is one more sale which is exempt, of course, so on that GST will not come. So 98 lakhs will be the answer. Next, which of the statements are correct, not incorrect? Correct. So in this, if you see, sir, he cannot opt for financial year 25-26 composition scheme. That is absolutely no, because his aggregate turnover is not exceeding 150 lakhs, and he's entitled to take ITC on 1st April, no. And Samarth shall be liable to pay GST under RCM under 9 subsection 4. Whatever you are purchasing from unregistered person, you need not pay under RCM. 9 subsection 4 is something different now, only for real estate people. And value of supply on which Samarth is liable to pay GST under RCM. Value of supply, not taxes. If you see value of supply, what RCM will come into picture? Here two cases I wrote RCM on his RCM liability 1.5 and 1.2 and 1.5. So total 2.7. Here we will do that legal services mistake, that you please be careful. Okay, so that is why they give two options. 2,80,000 and 2,70,000. Okay, first I thought 2,80,000 is the answer. Then when I cross checked, then I understood the mistake. What is the information I have ignored like a stupid fellow? Okay, so which of the following inward supply is not, again, not subject to payment of tax under reverse charge? Shop rent paid to KMC is RCM only, you know that. Legal fees, not an RCM. Uh, Purchase of stationery items, not an RCM. Transportation charges, RCM only. So 2 and 3 are what? Not RCM activities. They asked not RCM. Okay. Next, the hotel stay. Actually, if you remember, many of the cases you see in that MCQ cases, you are in one state, hotel you are going and staying in a different state. There you are registered, you are paying GST, but still you cannot take ITC because you are paying that particular state CGST and SGST. So, hotel Blue Pines located in Mumbai, Maharashtra. Samarth is from West Bengal, so he is going to a hotel in Mumbai and staying there, so he cannot take ITC there. So that is with respect to case scenario number 1. The next case scenario, if you see, very easy one. See, Mr. Anshul, a practicing chartered accountant, similar to the MCQ what we have seen in that 35 case studies. So here simple. First of all, understand. Here he is providing auditing and assurance services of 1 crore 86 lakhs. This is sale which is taxable. Okay, and he is also earning income of acting as an examiner of ICA or ICSI and getting 2,50,000. So this is exempt sale actually. This is sale, but this is exempt because services received by any education institution in connection with conduct of examinations. So setting up the question paper, printing the hall tickets, releasing the results, all that stuff. So examiner services are exempt under GST. Rental of commercial property during the year 13 lakh 90,000. This is also taxable sale. This is taxable sale. Taxable sale. Now, in the month of April, Anshul has purchased 10 computers for 25,000 each. New staff, okay, has availed ITC. Out of the 10 computers, 2 computers, what he did now, 2 computers he has given as donation. He has given as donation to a blind school. Open market value of the computers is 10,000. Here, one mistake what we may do is each word we will miss here. 2 computers he is disposing, and for 2 computers, for each computer, open market value is 10,000. That means here, this is also treated as sale, taxable sale. Taxable sale, but it is totally 20,000 because 2 computers. Next, he has filed a return lately by 5 days, and net tax liability is 1,80,000 and 2 lakhs is the gross liability. Interest calculation when we are doing, we will do it for only for the net liability, because it is just delay in filing the return and hence the tax has been paid late. Now please understand, please understand, 5 days late has happened, and here you have to calculate interest on 1,80,000, and when you are calculating the interest 18%, 5 divided by, one mistake what we may do is 5 divided by 30. We may feel like this is month word has come now here, so we may do it that way. So please understand, this is one mistake you might commit. So it is 5 divided by 365. Okay, so because 18% per annum interest you are putting, so when you are putting yearly interest, it should be by 365. You are putting monthly interest, you should put 30 there. Okay, so please be careful with that. Okay, so that is what the key points here. Remaining things and all, of course, you can manage. They're asking what is the time period for the books of accounts to be maintained for financial year 23-24. 72 months from the due date of annual return. Annual return due date is 31st December 2024. So from that 6 years, 72 months, you can go this way. Okay, so that is what the concept. Okay, hope it is clear for you. Next, right, aggregate turnover. They're asking aggregate turnover. Aggregate turnover means it includes taxable, exempt, everything. So what are the sales he made? Sales he made is 1 crore 86 lakhs. 1 crore 86 lakhs plus 2 lakh 50,000 plus 13 lakh 90,000 plus 20,000 totally. So how much is that? 1 lakh 86, 1 crore 86 lakh, sorry, plus 2 lakh 50,000 plus 13 lakh 90,000 plus 20,000. 2 crore 2 lakh 60,000 guys. 2 crore 2 lakh 60,000 guys. When you are calculating, please be very clear with the calculations, etc. When you are entering the zeros, please be careful. In that way also you might be doing mistakes. They are asking taxable turnover, aggregate turnover, now taxable turnover. If you see taxable turnover 1, 2, 3, that means out of 2 crore 2 lakh 60,000 minus what we should do, minus 2 lakh 50,000, if you do, we'll get the answer. So 2 crore 10,000. 2 crore 10,000 is the answer. Okay. Next, which of the following transactions are considered as supply? The services provided by an examiner to IC, that is also supply. Rental income is also supply. Next, donation of computers to blind school is also supply as per schedule 1. So 1, 2, 3 all are supply. Okay. Next, interest calculation as we have seen already. So how much is the interest? 1,80,000 into 18% into 5 divided by 365. You will get 444. So 444 is the answer. Here they said 444 can pay using either input credit. No, 444 cannot utilize ITC for the payment of interest. He needs to pay interest in cash only, and they have asked you only correct statement here, not incorrect statement. So this is the answer. So with this, we are done with case scenario number 2. So case scenario number 3, very easy one actually. So this is about Shivam Traders, a partnership from Rajasthan, registered monthly filer. Okay, so it has multiple depots and recorded as additional place of business in GST. The head office is one place and remaining additional place of business. July month data they are giving. Now they gave something like they purchased goods worth 5 lakh rupees and GST is payable on reverse charge basis, and the goods are received on 25th July, supplier issued, all that nonsense information and all given. Due to the absence of accountant, the transaction was recorded, something like that. So we have understood RCM purchase is there, 5 lakh worth RCM purchase is there. Okay, fine. Next, in the month of July, Shivam Traders issued vouchers 2 lakh for the customers, which are eligible to be redeemed against identified goods, that is important, and 5 lakh worth vouchers which can be used for redeeming multiple goods against the supply of any goods in the next 6 months. That means if you understand here, sir, sale of 2 lakhs will happen because date of issue of voucher itself will be taken as time of supply, and on 2 lakhs immediate GST liability will come into picture. But for the balance 5 lakhs, sir, the time of supply will come in future because the vouchers are not identifiable. The nature of supply hidden in the vouchers is not identifiable because it can be used for supply of any goods. So for 5 lakh time of supply will come in future. So July month, no liability, nothing. Next, they told Ajay, a partner who is a partner of the firm, booked a hotel in Udaipur, Rajasthan. Here hotel booking is happening in the same state. Immediately you should not think, yes, I can take ITC. This is taken for the wedding of his daughter, even though the money is paid from the firm's current account something. So this is a personal purchase, so blocked credit. You cannot take ITC also. No matter, even though it is there inside Rajasthan also, it doesn't change. Now, Shivam Traders also made a supply worth 25 lakhs, but please understand, on 5 lakh worth sales, GST itself is not applicable, but they have collected GST. And whatever is collected, obviously they should be paid to the government. So here sales again I should take 25 lakhs, not 20 lakhs. Okay, this is the information, and all the inward and outward supplies are covered at 18% rate. So opening balances of ITC etc. are nil, all that they have given. So now they have asked what is the net GST liability to be discharged in cash. So if you see sales, that 2 lakh voucher sales is there, 25 lakh last point sales is there, total 27 lakhs, 18%, 4 lakh 86,000. And purchases, if you see, only ITC purchase 5 lakh, this one first point they go, no, ITC purchase. See here, one interesting point you have to identify is, if you see the entire information here, the goods are received, RCM purchase of goods, time of supply is 12 subsection 3. The time of supply will fall in July itself. So that means GST liability will come in July month itself. And you can take ITC itself in July month, ITC also in July month itself. So 5 lakhs, 18%, 90,000 ITC has been taken. So if you set off, it is 3 lakh 96,000 to be paid. This is net GST payable. But cash liability, again, you should have RCM liability, you should add. So ultimately what you will get, answer 4 lakh 86,000. So this will be the answer. Hope you have understood. Easy one. Next, amount of ITC to Shivam traders against the hotel booking. For hotel booking, you will not get any ITC. ITC is nil. And will your answer change if the hotel is located outside Rajasthan? No, sir. Answer will not change even if the at least if it is located in Rajasthan inside the state. Okay, maybe chances. But this fellow is using it for personal purpose, so no ITC at all. Next, here there is one more thing, sir. There is a show cause notice issued with respect to that GST inadvertently collected for 25 lakhs sales. 5 lakhs not liable to pay GST. Imagine that fellow has not paid GST on that 5 lakhs. When the department has to give notice, see, this is a situation coming under section 76. Section 76 deals with where GST is not liable but you are collecting and not paid to the government. Now, section 76 will come into picture, and there is no time limit actually for issuing any show cause notice as per section 76. So happily without any time limit they can enjoy. Next, one more small easy MCQ here, that is nothing but you have imported something from USA and the value is 7,50,000. On the GST customs duty payable is 1,50,000. That means what, 20% is the rate. We can understand 20% of 7,50,000 is 1,50,000. Now due to some like it company filed bill of entry for home consumption, but before inspection and clearance for home consumption it found that goods were damaged. The proper officer also agreed for the damage of the goods. So now the value of the goods they have said 1,50,000 only. So when there is any damage of goods before the home consumption, all that, so obviously like the proportionate liability for customs duty will be taken care. So here on 1,50,000 only will pay GST 20%, that is 30,000. Okay, so that is what the answer. Next, one more thing. Paridhi Limited sent certain goods abroad for repairs, and it has been advised by their consultant that they will pay customs duty only on the fair cost of repairs and materials used in the repairs, except exactly correct. Freight and insurance charges both ways on re-import of goods. Correct. When you have imported the goods and now again when you are re-exporting it for the purpose of just carrying out the repairs, whatever is the fair cost of the repairs has happened, that only, yes, on that only will charge GST, and of course including freight and insurance charges, all the stuff. Now, sir, regarding this, what are the conditions to be fulfilled? It should be re-imported within 3 years from the date of export, or if it is extended, it can be extended for 5 years. The exported and re-imported goods should be same. The ownership of the goods should not have changed. All the correct points are correct. We seek your opinion about which one of the above mentioned conditions are correct. 1, 2, 3, all the conditions are absolutely correct. With this, we are done with this MCQ part. Now let us move on to descriptive part of 70 marks. So in this descriptive case, the first question, 14-mark question, seriously, one I don't know what to say, but still the question is just about computing gross GST liability. And when you are computing the gross GST liability, that means there are no input tax, nothing. They are straight away giving various details of outward supplies, and on that GST liability we have to calculate. They said on goods 12% GST rate, on services 18% GST rate, exports whatever are made to other than distinct persons and related persons, and also everything is made with LUT without payment of tax. Okay, so now what is the gross GST liability? We have to check. In that they said company is dealing with three types of goods. One is theta, delta and omega. Product theta and delta are taxable, omega is exempt. Okay, fine, these are the interesting things. Now simple, the theta is taxable, so here goods 12%, this is exempt, no GST, omega. Consultation services 18% taxable. Next, renting of commercial complex. Renting of commercial complex is also taxable because it is service, 18%. Export of product delta. Export we have already seen, it is through LUT without payment of tax. So this is zero rated supply. Next, export of consultancy services including exports made to Nepal, consideration received in Indian rupees. So any exports made to Nepal, you can receive the consideration in Indian rupees, Nepal and Bhutan. So this is happily like what, export only, zero rated supply, no GST. Sale of building, where entire consideration is received post issuance of completion certificate, and obviously no GST, neither stock nor source. Next, interest income on fixed deposits, then also no GST, exempt, you know. Next, sale of shares of a public company, sale of shares is neither stock nor source, it is not a good at all. Next, supply of cigarettes, they said 28% clearly, including excise duty. Yes, here the interesting thing is, yes, including excise duty, including any taxes other than GST and TCS under income tax will be added to the value of supply, so 28%. So this alone, you just make sure you remember that sale of cigarettes, excise duty will be included on the total amount you should charge GST, because value of supply includes all taxes other than GST and TCS under income tax. Next, petrol and diesel, of course, no GST, non-taxable. You know that. Amount received from Devi Prasad Private Limited of Lucknow, Uttar Pradesh. It has sponsored the business exhibition organization held by sponsors for it is again 18% service. Okay, taxable 6 lakhs. Hmm. Now, please understand here one small important thing which we should remember is, here this is sponsorship services. Sponsorship services provided to body corporate or partnership firm. So here it is a body corporate or partnership firm. So it will be like sale only, but RCM sale. So in our hands there will not be any liability. So this will not be added to gross GST liability. Okay. So let us take the amounts. What are the amounts we have seen? So 50 lakhs, 50 lakhs, 1 crore, 1 crore 50 lakhs, 1 crore 50 lakhs, 2 crore 50 lakhs. Okay, is that the answer? So that is 2 crore 50 lakhs, and on that gross liability we should check. So you can apply the rates here, what and all we have discussed. Quickly we can just go through 12% now, 50 lakhs into 12%, 6 lakhs. Again 50 lakhs into 18%. 9 lakhs, 9 lakhs. Next again 9 lakhs. Next 28 lakhs. So what is the total gross liability? 28 lakh plus 9 lakh plus 9 plus lakh. So 52 lakhs. You see the answer? Yes. 52 lakhs is the answer. There should be paid gross GST liability. So a small question, simple question, 14 mark. That is what the answer. Hope it is clear for you. Now let us move on to question number 2. So the next question number 2, sub question A. In the SC they have given, there is a manufacturer whose opening ITC balance is 1,60,000 for the month of June, and he provides following information for June. So he is purchasing some raw material. On that input tax is 40,000. It's not the value, it is input tax 40,000, and it is used for both taxable as well as exempt supplies. So this is common credit. Next, input tax on catering services for housewarming ceremony, it is blocked credit, no ITC. Next, ITC on raw materials used exclusively in manufacture of exempt supplies of 2 lakh is 20,000. So on this also you cannot take ITC. And here one important thing which we should not forget is, they are giving you an information, they made exempt supplies of 2 lakhs here. So here exempt turnover is 2 lakhs, that we should remember. That is the interesting point here. Okay, next, input tax on cosmetic or plastic surgery of the manager of the factory. This also you cannot take ITC. Total taxable turnover is 60 lakhs. So taxable turnover is 60 lakhs. That means what is the total turnover? Total turnover is 62 lakhs. For that only this information is very important. Here this mostly there are chances you might be ignoring. Okay. Next, the total taxable turnover for the month of June is 60 lakhs. Okay. What is the ITC to be created for the month of June to the e-credit ledger, and net GST payable from cash ledger? You understand, you know what will be created to e-cash ledger, e-credit ledger? Only this 40,000, correct? That 40,000 will be created. So now this is the amount credited to e-credit ledger. From this, if you remove which are exclusively for taxable purpose, then you will get common credit. And out of these 4 purchases, nothing is exclusively for taxable purpose. Nothing is exclusively for taxable purpose. So it is 0. So that means 40,000 is fully common credit. That we have already understood. Out of that, how much we should reverse? Whatever is related to taxable exempt supplies. Exempt supply is 2 lakh. Total turnover is 62 lakh. That means how much we should reverse? 40,000 into 2 divided by 62, if you put also, you will get the answer. 1290 rupees. 1290 rupees we have to reverse. That means 40,000 minus 1290 will be the ITC available. 40,000 minus 1290 will be the ITC available. So 38,710 rupees is the ITC available. So the answer is ITC credited for the month of 2E credit ledger is nothing but 40,000. Out of the reversal, what is the ITC available for you? 38,710. So what is the net GST payable in cash? For that we should know the liability. So 60 lakh is the sales, correct? So 60 lakh is the sales, and on that 18%. And here they said ignore rule 86B also for sake of simplicity. For the sake of simplicity, so 86B also you ignore. So 18% is like 18 6 108. Okay, so 60 lakhs means 18%. 10 lakh 80,000. Yes, 10 lakh 80,000 is the gross GST liability. Minus how much is the ITC? You have 38,710 rupees. So 10 lakh 80 minus 38,000. So 10 lakh 41,290 will be the net GST payable in cash. See here, calculation mistake. Okay, with over excitement. It's not 10 lakh 80,000, it is 1 lakh 8,000. So no matter how good you are in mathematics, use calculator simply. 1 lakh 8,000 minus 1 lakh 8,000 minus 38,710. Okay. Late night recordings, brain is not working. Correct. Sorry. 60 lakh into 18%. Correct. 10 lakh 80,000. Okay. Minus 38,710, and minus there is opening balance from 1 lakh 60,000. I forgot that. 1 lakh 60,000 opening balance is also there. So 10 lakh, extremely sorry, calculation error, not conceptual error. Okay. So minus 1 lakh 60,000 minus 38,710. Okay. So 8 lakh 81,290 will be the answer. That is the answer. And this is a 10 mark question, very easy one. So hope it is clear for you. Next, part B question here in this, based on customs duty, you know, for 5 marks, sorry, 4 marks. So the next one, if you see, as we were discussing, customs duty, customs one, and this question is regarding determining the assessable value. Most of the cases they will ask that only. Yes, arrive at the assessable value for the purpose of customs duty payable. If you see here, price of the machine is imported a machine from UK. Okay, price of the machine is 10,000 pounds. Okay, freight air. When you see air, you should remember 20% on FOB is the cap. If you have paid more than that, you will limit it only for 20% of FOB. Next, engineering and design charges paid to a firm in UK definitely will be added. Okay. Next, license fees relating to imported goods payable by the buyer as a condition of sale. So whatever the license fee, royalty, all these things are paid by the buyer to the seller as a part of condition of a sale, obviously should be added to the value of supply. So 20% on the price of machine. Machine is 20,000. 20% is 2,000 UK dollars, UK pounds, sorry, not dollars. Materials components supplied in UK by the buyer free of cost, valued at 20,000. See, when buyer is supplying certain things without consideration, then automatically that will be added to the value of supply. Even in GST, we have seen same kind of logic. Okay, so this is 20,000 rupees, and insurance is 6,000 rupees. Buying commission paid by the buyer. Buying commission, you know, that will not be added to the value of supply. Any commission etc. will be added except buying commission, you know that. So this we will ignore. Next, interbank exchange, CBIC rate. You know, only CBIC rate we will consider. So 100 rupees will be considered. 100 rupees per pound will be taken. Importer paid 5,000 rupees for demurrage charges for delay in clearing the machine from the airport. This is one important point which you should remember. The demurrage charges with respect to when you are transporting the goods through ship, then it will be added to transport cost only if it is ship. Okay, it will be added, remember that very well. But here it is through airport, so that will not be added to the value of supply, that is assessable value. So I repeat, demurrage expenses will be taken as transportation cost only when, so it will be added to the assessable value only when it is transported through ship. Okay, for air and all it will not be considered. So if you see now, 10,000 into 100 rupees, So it is 10 lakhs. 3,000 pounds, we will not consider this first. Let us keep it aside. 500 pounds we should add. 500 pounds, if we add, it will be 50,000. And 2,000 pounds is there. That also you should add. So that is 2 lakh. So totally, that one is there. So next, material supplied by the buyer only, that is 20,000. So these things are there. So these are the things. So this is free on board. So total 10 lakh, 12 lakh, 12 lakh 50, 12 lakh 70, 12 lakh 70,000 is the FOB value. So on FOB we will take freight. Freight is how much? Maximum 20% on this FOB, correct? 12 lakh 70 into 20%. So 2 lakh 54,000 you should take. 3,000 UK pounds converted into rupees will become 3 lakhs. So 3 lakhs is higher. We should not take it. We should definitely maximum cap it to 20% of FOB, 2 lakh 54,000. Next, freight is over. Now insurance details are given. Insurance, so it is 6,000. So you should take that. So 12 lakh 70 plus 2 lakh 54,000 plus 6,000, it will give you 15 lakh 30,000. So this is the assessable value, 15 lakh 30,000. So that is with respect to this 4-mark question on assessable value. Okay, we are done with that also. Let us move on to question number 3. So in third question, subpart A, here one simple, really simple question actually. See, there is a clinical establishment, multi-speciality hospital. In that there are freelancers, the doctors who are working on freelancers basis. That means they are not employees, so they are like consultants to them, and they're coming and treating the patients there. So they don't have any connection with the patients. These consultants, the senior doctors, will bill the hospital. Hospital will add their whatever the charges, etc., etc., and will charge to patients. Now the doubt here is the services provided by the senior doctors and consultants. These are provided to the hospital, not to the patients. So these are not healthcare services. These are exempt under, not exempt under GST. This is taxable. Like that, the department is feeling. What is your take on this? Is what the question. See, in medical services exemption, what we have seen, healthcare services provided by authorized medical practitioner, clinical establishments, and paramedics to anybody. So it is not required that patient only, like to patients directly these people are providing. Senior doctors, consultants are also nothing but authorized medical practitioners, and they are also providing healthcare services only to medical establishments. So here that is exempt under GST. Regarding that, if you are writing your explanation, then it is well and good a 5-mark case study based question. Next one, another easy one regarding place of supply for immovable property. The place of supply for immovable property, here the twist is property is located outside India. If the recipient is registered in India, both supplier and recipient are in India, section 12 subsection 3 will come into picture. So as per 12 subsection 3, what is the place of supply? Location of immovable property. But if the immovable property is outside India, the location of the recipient itself will be place of supply. So in first case, Maharashtra. Next one, supplier is in Delhi, recipient is in New York. So one fellow is in India, other fellow is outside India. So 13 subsection 4 will come into picture. Then accordingly, 13 subsection 4, it says straight away location of immovable property itself will be the place of supply. So Paris will be the place of supply here in the second case. So that is what that situation, that particular question. Next, the last part in this question number 3. See, there is a company, Vinayak company, imported goods worth 10 lakhs, and bill of entry is filed on 15th December, on which tax is payable at 20%. The proper officer is deciding that this goods should go through any chemical test or some other test. So he's saying, let us provisionally assess the value as 10 lakhs and pay the tax accordingly. So provisionally our Vinayak company has paid 2 lakh as customs duty, and Vinayak wants to voluntarily pay 1,50,000 on 20th Jan 2025. When 2 lakhs he has paid already on the same date, that is 2 lakhs is on 15th December, and 1,50,000 he is paying on 20th Jan. Okay, so he wants to pay, he is not paying, he wants to pay. Can Vinayak company provisionally pay duty, and what are the conditions to be complied for such payment? See, generally provisional assessment is obviously allowed by the law, section 18 if I am not wrong. So in that case you can pay tax provisionally, but the only condition is you should give proper security, like executing the bond, all the stuff, to the proper officer if he is needed, to the extent how much ever he is asking for. That is the only condition. So provisionally he can pay the taxes. That is number 1. And they are asking, determine the amount of interest payable if under section 18, assuming that payment of 1,50,000 here, 1,50,000 has been made on 20th January. On 20th January itself, assume that they have paid 1,50,000 tax, and the final duty assessed is on 31st January 2025, 4 lakhs. and the balance duty is paid on the same day. That means whatever the balance is there, out of 4 lakhs, 2 lakh, 2 lakh, 3 lakh 50 is already paid. Balance 40,000. Balance 40,000 is paid on 31st January. Okay, balance 50,000 is paid on 31st January. So they are asking you what is the interest calculation here. That is important. What is the interest payable? Okay. So if you see the interest calculation here, what happens? See, first you paid 2 lakhs, and then finally we have assessed it like 4 lakhs. See, when interest is being calculated in case of provisional assessment, interest will start from the first day of the month in which provisional assessment has happened. Provisional assessment happened here on 15th December. So from 1st December, interest will come into picture until the date of payment. What is the date of payment? 31st January. Okay. So total 4 lakh should be paid, but till date you have paid 3 lakh 50 only. That means from the beginning 50,000 is outstanding. 50,000 is not paid. So on 50,000, 18% interest into like what? How many days pending? 1st December to 31st Jan, it is 62 days. 62 divided by 365. So 50,000 into 18% into 62 divided by 365. So 1529 rounded off will come into picture. Okay. But sir, this 1,50,000 was also paid somewhere in 20th Jan only, no? That means for this particular period, 1st December to 20th Jan, that means 31 days plus 20 days. For 51 days, even for 1,50,000 interest will come. 18% into 51 divided by 365. So that is 1,50,000 into 18% into 51 divided by 365. If I do any arithmetical mistake, please do comment. Okay. So 3773. I don't think there are any arithmetical mistakes. No arithmetical mistake, only percentage mistake. 15% it is. Sorry, not 18%. Seriously, by recording too many things and by staying completely in studio, my mind is not working fully. Okay. So 15%, 15%. So if you do the calculation accordingly, let me show the answer why that non. So this is the case. Only thing, number of days, everything correct. So for 1,50,000, 51 days interest. For 50,000, 62 days interest. 15% is the interest. That is what the point. Okay. So hope it is clear for you guys. Conceptually, we are right. Here and there, any arithmetical errors from my end, please don't misunderstand. Okay. So with this, we are done with question number 3. So the next one, if you see the fourth question, very easy one, simple here. See, Mahima Limited is filing a belated return under section 39. So after the due date, they are filing the return after 60 days from the month of January. So Jan month return, they are filing it late after 60 days, and they're asking you to calculate the interest payable on that. Obviously, you know, interest is payable on the taxes paid through cash ledger, correct? They said what is the gross liability, what is the GST payable under RCM, and whatever is ITC, and they only clearly give after set of everything simple, sir, this is the cash liability, like that. So you know, only on cash liability, whatever we are paying through cash ledger, on that only like we will pay interest. And one more please important point, remember, as per the amendment, in the cash ledger, if something is there, whatever the amount is there, from the due date of filing that return till the date of payment, if any balance is already lying in cash ledger, you are not freshly uploading, then that amount also will reduce. That means gross liability minus ITC balance minus cash ledger balance, then whatever is there net, on that only you have to pay interest. So that way. And they also asked, will your answer be different if entire tax for the month has been paid through credit ledger except RCM? Then obviously what will happen, interest will come only on the RCM liability, which is to be paid in cash, because entire amount is paid through ITC balance. Okay, that is what the point. So you can make the calculations. So 18% into 60 divided by 365, you can make these amounts. For first case these amounts, second case these amounts you have to enter. That is the answer. Okay, next, another question in this is nothing but they are asking you about aggregate turnover definition. Aggregate turnover, determine the aggregate turnover. Simple. Here the only interesting point I'll tell you is this fourth point. First, sir, what and all aggregate turnover? Diesel, non-taxable supply, yes, it's aggregate turnover. Goods, after supply of goods, after completion of job work from the place of Avkash Enterprises. See, this is the question regarding Avkash Enterprises, which is in Rajasthan. Okay. After completion of job work from the place of Avkash Enterprises, directly principal is selling the goods, declaring Avkash Enterprises as the additional place of business. See, this is the supply made by the principal, not by Avakash Enterprises. So this will not be added in aggregate turnover. Next, export of goods. Yes, it is aggregate turnover. You know, simple logic. Aggregate turnover is your outward supplies, whether it is taxable, non-taxable, all that. But one interesting point, as I was talking, the supply to its own additional place of businesses in Rajasthan. See, in aggregate turnover definition, interstate supply between distinct persons is given. So here within the state, even though they are distinct persons, it cannot be taken for aggregate turnover definition. So interstate supply between distinct persons only will be added in aggregate turnover definition. So this will not be considered. Next, outward supply on which GST to be paid by recipient under reverse charge. We are making supplies, but that is liable for GST by the recipient. That doesn't matter. It is our aggregate turnover only. So that is also our turnover. So this is the answer. 1 lakh, 5 lakh, 1 lakh. So 7 lakhs is the aggregate turnover. Okay. And here what is that they asked? That's all. Any registration related concept? For the purpose of registration, they are asking for the purpose of registration. So what is the aggregate turnover? We have calculated, and whether they are liable for registration or not. Obviously, yes, you can understand. This is in Rajasthan. Rajasthan, he is selling both goods, goods as well as he is providing services also. So when he is providing goods and services both together, obviously in Rajasthan threshold limit is 20 lakhs if you remember. So he need not go for registration. That is what the point. A simple question, not that difficult one. Next, if you see, there is something like total duties payable under customs. Raju imported rubber from Malaysia, landed price exclusive of duties 25 lakhs, and it has been notified by the government that the share of imports rubber, almost we have seen the similar type of thing, exceeds 5%, safeguard duty 30%, IGST they give 12%, BCD 10%. Ignore agriculture infrastructure development cess. So that means simple here. See, 25 lakhs is there. For that BCD 10%, how much? 2,50,000 plus social welfare surcharge at 10% on BCD, that is 25,000, and plus safeguard duty 30% on price, not including basic customs duty, all that. So 30% on 25 lakh. So 25 lakh to 7 lakh 50,000 will be there. 7 lakh 50,000. Okay. Next, IGST. IGST will be on all these adding, after adding all these things on that, IGST will come into picture. So 25 lakh, 2 lakh 50, 7 lakh 50. So 10 lakh 35, 35 lakh 25,000. So if you add all these things, so 35 lakh 25,000. On this, we have to charge IGST. IGST, how much percentage they gave? 12%. Yes. 35 lakh 25,000 into 12% is 4 lakh 23,000. 4 lakh 23,000. So this is the story. So they are asking you total duties payable 2 lakh 50, 25, 7 lakh 50 and 4 lakh 23. So if you put together 4 lakh 23 plus 2 lakh 50 plus 25,000 plus 7 lakh. So the answer is 14 lakh 48,000. That is the answer. So this is what all about fourth question. Now let us move on to question number 5. So the next one, if you see question number 5, the ditto same question exactly we have already seen in MTP May 2025 MTP 1. So mock test, first mock test paper. So you can just go through that. Nothing but this fellow is like 245 lakhs collected tax, 241 only paid 4 lakhs. For that and all prosecution will not come. 550 lakhs collected, 30 lakhs paid. So 520 lakhs default. More than 5 crores is prosecution will come. Minimum 6 months, maximum 5 years. And it is non-bailable also. So they're asking about bailability and quantum of punishment, all that one. And if it is repeated, then what will be done? If it is repeated, so repeated offender without any monetary limit, obviously imprisonment will come with minimum 6 months period, maximum 5 years. Okay, so that is what the point. And if it is quantum of amount is exceeding 5 crores, see, then only it is non-bailable. So that is what the concept. We have already seen that. Next, regarding the appeal pre-deposit amount, what has to be done, that. And one more thing, please remember, please go through before going to the exam, please go through this one, like if department has to file an appeal against the order of the appellate authority, what is the what is the monetary limit which has to be considered for going to GST 80 or for High Court, for Supreme Court, those limits, please make sure when you are going for the exam, or I'll just show you 1 second. So this is the point I was talking about. So if the department wants to go for an appeal, against any order. Sir, if it wants to appeal an order of with appellate authority with GST 80, then at least the money involved should be 20 lakhs. Okay, it should exceed 20 lakhs. GST 80 order, anything it wants to appeal with High Court, the money involved should exceed 1 crore. And any High Court order it wants to appeal with Supreme Court, the money involved should go beyond 2 crores. Okay, so then only the department can go and file an appeal in these appellate forums. Okay, otherwise they cannot go. And here, when you are calculating considering the monetary limit, please be careful that, sir, if tax amount there is dispute with respect to tax, interest, penalty, all these things are there, you ignore everything just to take tax. Okay, that amount only you consider, aggregate amount of taxes. You see GST, SGST, all that. Simple. Dispute is with respect to the department is going for an appeal, where the dispute is regarding tax, interest, late fee, penalty, all that. Only tax portion you calculate. If that is exceeding these limits, then only the department can go for an appeal. Or if the dispute is only with respect to interest, calculate interest amount only exceeding these limits. Dispute is regarding only penalty, then the penalty should exceed these limits. Late fees, late fee should exceed these limits only. Sir, no sir, it is regarding both interest, penalty, late fees, all these things. Sir. Tax amount not involved, sir. Then what we should do? Add all that aggregate interest, late fee, penalty, all these things, and if it is exceeding these monetary limits, then only they can go for an appeal. And erroneous refund, how much ever amount refund in dispute, if that is exceeding these limits, yes, department can go for an appeal. Otherwise, department cannot go for a further appeal in these appellate forums. Okay, so that is what the point. And sir, there are certain cases where monetary limits are not applicable. Yes, where the decision on which we are going for an appeal is related to any GST law which is declared as ultra vires the constitution, any rules or regulations which are declared as ultra vires the parent act, or any order in instruction of the CBIC which is ultra vires the circular declared as ultra vires the GST law or rules. So like this, any matter relating to, remember this, valuation, classification, refunds, place of supply, or any other issue which is recurring in nature and involves interpretation of provisions and strictures or any adverse comments over the government or department or officers, or any penalties imposed on government or department or officers, are necessary to contest in the nature of interest of justice or revenue, interest of revenue or justice. For these cases, if they want to contest, then without considering this also, please remember, can be tested as a straight theory question. So in that cases, monetary limits will not be considered. Okay, so that is with respect to the uh, limits for going for an appeal, by the department. Okay, that please make sure you are very thorough. Next, so for preferential rate of duty, what are the conditions we have seen in mock test paper 1? And here question number 60, straight full theory questions, all the stuff. One is regarding the liquidation of the company and who is liable to pay GST, all that stuff. And next, rectification of errors, all that. And transfer of property is treated as void in certain cases as per section 81. What are those cases? What are the similarities and differences between advance authorization and DFIA, duty free import authorization, these cases? So just go with this question and answer straight away, read it. Of course, we can't expect the last question will be from any nook and corner, some small random theory question they'll ask, but still, you just, for fair idea, if you are very lucky, you may get the repeated questions. Just read this question and answer properly the theory question, remember the key points, and go to the exam. So with this, we are done with this question number 6 also. So hope you have enjoyed watching this video. So please do share with your friends who are writing the CA Final IDT exam, of any attempt for that matter. So enjoy your preparation, keep yourself cool and calm during your exams. Wishing you all the very best. This is your Mr. GST signing off. Jai Hind.